Shravan, you actually mentioned in your deliberation that UTI multi-asset allocation fund is ideally suitable for investors who are looking for balancing risk and reward. However, what should be the ideal allocation to this fund as compared to the one's overall portfolio, and also what should be the preferred, what should approach for investing? So either lump sum or SIP, if you can throw some light.
Sure. See, multi-asset allocation fund provide access across equity, fixed income, and gold, and that too in a systemic manner, driven by valuation-oriented factors, right? So I would say if somebody who wants to just invest in a single fund, that multi-asset allocation could be that fund, right? So allocation depends upon how closely investor is monitoring the market, which segment of the market he wants to invest. But I'm saying that from longer term perspective, if you want to invest in a tax efficient fund, then multi-asset allocation fund is one such fund, because any rebalancing from one asset class to another does not entail any tax on the investor, either directly or indirectly. So for example, if somebody investing in multi-asset allocation fund today and redeeming after 10 years, so he is paying equity taxation, which is 10% capital gain after 10 years. Within this 10-year period, there is no direct or indirect taxation, although fund keep changing allocation from one asset class to another asset class. Same thing if investor is trying to do at his or her end will lead to a lot of taxation, because whenever he is shifting from one asset class to another asset class, there are a lot of tax incidents. So multi-asset allocation fund provides you single route access across different asset class which are having negative or low correlation to each other. So if somebody wants to generate stable return for a very long period of time, multi-asset allocation fund is very suitable for such investors. And when it comes to the approach of investing, typically we advise people to invest in equity oriented funds using SIP route, because you want to capture different points of the market. But balanced advantage fund or multi-asset allocation fund, which are investing across various asset class depending upon relative valuation approach, are suitable for investing through lump sum as well, because the asset allocation is handled by the fund itself rather than investors. So you are not concerned about whether I'm buying 50% equity or 70% equity or what are the valuations. That is taken care of by the fund itself.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.